All right. Hey, everyone. Welcome to another edition of RIA Live. I'm Annie Dickerson here with Quentin Briantis. Quentin, how are you today?
Hey Annie, I'm doing great. Just sprinting into the holidays, as I'm sure many of you out there in Facebook or the chat room are as well.
And you're spending the holidays in the desert with your family, is that right? Nice warm weather, pool
Oh
party.
yeah, I was just checking the weather. It's going to be 80 degrees and sunny. We're going
Oh
to do
my
a little
gosh.
family pool party. I feel super lucky and spoiled.
Indeed. Well, everybody who's watching this from the Midwest or the East Coast or anywhere up north, I'm sure is very jealous hearing that you're going to be in a pool on Christmas.
Yeah.
That's awesome. Well, Quentin, tell everybody what we're focusing on today in Real Life.
Yeah, super exciting topic today. So today we're going to be talking about mentors and how to find mentors, why you should get a mentor, and how it can really ultimately help you scale and grow your real estate business from where it is today or where you want to start it today and take it to that next level there. So a lot of nuggets that we've seen and are excited to dive into on the mentorship front.
And this is a particularly good time of year to talk about this, right at the end of the year when you've got the whole next year ahead of you. And traditionally we've seen, just like people buy a lot of gym memberships early in the new year, people also make it a priority to focus on their finances early in the new year. And so if you find the right mentor and you start down that path, then you can start to attract the right investors for your deals. So it's a great time of year to consider if you want to make any moves or start working with a mentor.
Awesome. Well, let's get started. So first, we kind of want to back up a little bit on like, why do you even want to get into actively investing in multifamily or commercial real estate, whatever your specialty is going to be focusing on? We've seen two main areas. So one on the personal level is to help build wealth and income. So a lot of times this comes down to replacing a current W-2. Maybe you're a busy doctor or lawyer or business owner that's looking to transition over into real estate or something new. Tax advantages. We see a lot of people with a spouse who has a very high income that wants to start investing actively in real estate to really start reaping all those tax benefits that come alongside of it. Also helping others build wealth. I know this was a big piece when Annie, you and Julie started out Goodegg Investments, is the impact you could have on helping other people invest in real estate syndications alongside of us. And then finally, investing outside of the stock market or diversifying into more non-traditional means to help build wealth out through there. So that's one section of where we see a lot of people coming from. Another is wanting more control and ownership. So this comes down to the more active side of investing in real estate. And a lot of times people who previously were passive investors and wanted to shift over to the active side, control and ownership was a big reason in doing so. So with that, it comes with acquisition fees that you're able to earn, asset management fees, as well as back-end equity from when you go to sell the property after the holding period.
Yeah, and as you're talking, Quentin, it's making me, we've talked a lot internally about this recently, but it's making me think of Robert Kiyosaki's cash flow quadrant
Yeah.
and how, some of you who are watching might be, in that employee quadrant where you have a W-2 job and a salary, and there's nothing wrong with that. But there's three other quadrants, and you might aspire to become self-employed or a business owner and ultimately an investor. And so what Quentin's talking about is, making that shift from an employee into a self-employed entrepreneur. And that in and of itself can grow your income quite substantially. But if you then want to grow your income exponentially, then you've got to go from self-employed to business owner, where you have a team of people working with you and for you to realize your vision. And then ultimately, then you can transition to the full-on investor quadrant where your money is working for you. And so this is a big reason why a lot of people get into multifamily investing in the first place is because they see the proof of concept, maybe through investing in rental properties or through investing passively. And they say, oh my gosh, this is a great business idea. And I want to also point out that, and I think we're going to talk more about this, but deciding what part of the multifamily syndication space you want to be in, whether on the capital raising side or the acquisition side, is also super important. And I know we're going to talk about that as well. So, Quentin, keep going.
Yes, thanks for teeing us off. So first, we will kind of break it down into 3 steps into finding the right mentor. First and most importantly is going to be defining your goals. So why are you getting into the multifamily space? Where do you see yourself in 5 years? What is the plan of your real estate portfolio from now, looking 5 years into the future? What type of business do you want to have? Again, going back to that cash flow or the business quadrant that Andy was talking about, do you want to be a more self-employed real estate investor? Do you want to scale this into a business? Do you want to have a full-blown team underneath you? These are all things you want to think about early on before you even start looking at a mentor. And then most importantly, what are your strengths? So we'll break this down on our next slide, but you really want to think about what are you good at? What do you enjoy doing? And how can you maximize those skills, those strengths that you already have so that you can position yourself in the real estate team, in the multifamily space in the right seat.
I'll give you a perfect example here, which is when we started out, Julie and I both early on, we realized that underwriting and talking to brokers, asset management were not our strong suits. What we love to do, because I used to be a 4th grade teacher, I love education, and she loves talking to and helping people answer their questions. She came from the legal field. And so together we realized our strengths were in marketing and sales and education. And so that then led to us saying, okay, well, there's 2 main paths you can go down to get into multifamily. There's either you start out with raising capital or you start out with acquisitions. And so we said, well, acquisitions is not going to be where we start. Thank you, Quentin. I jumped ahead. The acquisitions is not going to be where we start because those are not our strengths. But capital raising is much more in line with our strengths. So that's where we started. But Quentin, I'll let you dive in deeper and then I'm going to circle back too.
Yeah, exactly. So just stacking on what Annie was saying, again, the 2 main branches, raising capital, acquisitions, going back to the strengths that Annie was just mentioning, on the raising capital side is where you really are building a lot of investor relationships. You're really educating all of those investors, nurturing those relationships, and you enjoy talking to them. By nature of raising capital, you have to enjoy talking with other people, being able to hop on a phone, cultivate those relationships, answer all those investor questions. So if your strengths line up, or if that's the side of the business that you find you would excel at, raising capital might be a good place for you to start. On the flip side, on the acquisitions piece, and this can also bring in a little bit of asset management as well. You want to have a strong financial background. I'm sure any Excel wizards out there will really fall into the acquisitions piece. If you enjoy networking with brokers, building those partnerships, and a lot of the more strategic partnerships in a real estate deal, the acquisition side might be a good place for you to start instead of raising capital. So going back to defining those goals and looking at your strengths first, I'm sure you'll have a good inkling of kind of which direction you might be going towards.
And if you're not sure, I will plant this seed with you, is that of these 2, if I had to choose, the raising capital side of things tends to be a little bit lower risk and a little bit lower cost and a little bit easier to get off the ground. And here's why, is when you're starting out with raising capital, what you're essentially doing is what you're probably already organically doing with your friends and family already. You're talking to them about these investments, you're sharing what they're all about, you're answering their questions, you're educating them. And then over time you build trust and then they want to come and invest alongside you. So this is something that you can easily do even without a brand. In fact, when I first started raising capital, I didn't have a brand, didn't have a website, I had a one-page PDF and started building those conversations and the trust that way. So it's very easy to get started and to test it out to see if this is really the right path for you. And if through those conversations you discover, hey, just within my friends and family network, I have like 10 people who have some money that they want to invest, then great, this is probably a viable path for you. Now, the other side, as Quentin was talking about, is acquisitions. Now, this side can be a little bit more challenging to get off the ground because of that startup capital you're going to need. So, networking with brokers. That is, I mean, you could do that just through phone and email, but to really get the good deals, you've got to get in front of the brokers, which means face to face. So if you live in one of the markets that is great to invest in, that might be great. But if you don't, if you live in a market like San Francisco or LA or New York, you might have to then fly to one of these markets and set up these meetings with these brokers. And, you know, you don't know at the end of the day, something may come of it or something might not come of it. And so that's a little bit more of a risk that you take. And so with the acquisition side, there can be a little more of a sort of a risk involved with you know, not knowing if and when you'll find a deal. And so that's the only thing that I would caution on that side. Is that with raising capital, it's pretty free and easy to get started. With acquisitions, there's a little bit more of a lift, but of course, there's also a great payoff at the end.
Oh, yes. Awesome. And then moving over to now what we're really here to talk about is next finding a mentor. So again, breaking it down into the two buckets, and this may seem intuitive, but a lot of times we've seen some people get a little bit lost when they see some big names or big mentorship groups out there that might detract or pull away from what they're really looking for. So first, make sure that your potential mentors have direct experience with what you're looking to learn. So again, going back to the acquisitions piece, if you want to get in on the acquisition side, you want to be looking for a mentor that has built out extensive relationships, that has a lot of experience underwriting, and has all of those skills that you're looking to beef up for yourself. On the flip side, for capital raising, you want to see someone that has a really strong track record of raising capital. They've built all the systems, all the processes to really scale their raise capacity, and have that track record to show from kind of help you get to where you are now to where you want to go. So always thinking or making sure that all the pieces are in place with the mentor you're looking for so that you're getting what you want out of that relationship as well.
Yeah, this is such a key point because there's a lot of mentors out there with, you know, it's easy to get lost in the marketing, just as, you know, some people get lost in the marketing for a particular syndication deal. It's easy to get lost in all of the marketing when it comes to a mentorship program. But what we're talking about here is really getting crystal clear on what you're getting out of that program and making sure it's in line with that business plan that you have, that vision you have for your business, and it's in line with the strengths that you want to grow, or vice versa. If you want to focus on the areas that you're not strong in and you want to develop, you want to make sure that the program lines up with that. And so always ask the mentors, you know, if you're wanting to raise capital, do they raise capital? Do they still raise capital? Or did they raise capital 3 years ago? And then once they started their program, they stopped doing that to focus on the program. That's going to be a red flag because those things that they are teaching are from 3 years ago, and they might not be keeping up with the pace of change in the industry. So you want to make sure that somebody has that on the ground actual experience doing the thing that you want to be doing, and that they're currently doing it and continuing to experience success and growth. And also you want to make sure, like I was thinking about this before we hopped on, I was thinking if I had to pick a mentor now, I would definitely not pick somebody way high up like a Jeff Bezos or an Elon Musk. Yeah, they're great at business, but they are way too far ahead of where we are. They're not going to be able to help us at this stage in our business. So that's another consideration too, is making sure that you find someone who is maybe just a step or two or three ahead of you, not 10 steps ahead of you, because if they're too far ahead, they might not remember or be as in tune with the types of challenges that you're experiencing at this stage of your business.
Yeah. I also want to take a second to talk about paid versus unpaid mentors. I know there's this massive, I guess, debate around, is it really worth it to pay to have a mentor? Or how can I find one that's not paid, but then you really need to build that relationship? So Annie, what are your thoughts on kind of, is paid worth it? Is unpaid? Like, and how do you kind of go with what's right for you?
This is such a good topic. We could probably spend the whole time just talking about this because I've experienced both sides. I mean, paid and unpaid. And I've also been on the mentee and the mentor side of things. So I have lots of insights about this. I will tell you, the first time that I paid for one of these mentorship programs, it was the first time I had ever spent that kind of money. It was $5,000, and this was over 5 years ago, and it was a big deal to me at the time. I was working a W-2 job, didn't know if this was the path I wanted to go down, and here was this program, and I had listened to this person's podcast and read their blog posts, and I thought, okay, this is a person who's, can teach me what I need to know, but $5,000, that's a lot of money. And I thought, okay, well, I could try to get an unpaid mentor, but I knew in my head and in my heart that if I didn't pay for it, I personally probably wouldn't prioritize it as much. But if I had that $5,000 in, man, that was going to light a fire under me. And it did. It did, because I had skin in the game. And so I bought that program and I became so committed. And at the time, my kids were like 4 and 1. So, they were still waking up super early. And so I would get up at like 4 or 5 a.m. and start working on this program until they woke up. I do the whole breakfast thing, get them off to daycare, preschool. And then I'd work my full-time job, my W-2 job. And then at night, after they went to bed, then I'd go back and continue working on the program. And because I had paid for it, it made me so committed. And that's why I saw the results that I did, was because I had that level of priority and commitment. Now, I have also worked with unpaid mentors, and I've also been an unpaid mentor. We've had mentees come on, and it's not that it can't work. It's just, in my experience, when somebody's not paid for their time, they're not going to prioritize that relationship as much as if they were paid for that time. And similarly, you as a mentee, if you're not paying for it, then you also might not have that same level of commitment. Again, this isn't across the board, and it's entirely possible that an unpaid mentorship could work out really well. You just have to know yourself and your level of commitment and your strengths to know if that's something that you can commit to, because it's not going to be just a 1 week or 2 week relationship. In order to really get everything that you need out of it, it's going to be months, if not years. Certainly, Julie and I have been part of multiple mentorship programs at this point, and many of them have taken place over many years. And so that's the main thing that I would put out there, is just consider your level of commitment. And sometimes that paid versus unpaid makes that difference in the commitment, which ultimately makes the difference in the results.
Awesome. No, awesome advice there for everyone that's listening. All right. So just to kind of recap everything that we were just going over, the 3 steps to finding your right mentor, So again, defining those goals, getting crystal clear on your strengths and where you want to go, and understanding, as Annie was just saying, that commitment piece, like which path is going to have the most commitment for you to really see things through. So if you're going into the acquisitions path, definitely look for mentors in that realm. Same thing goes with raising capital. The more crystal clear you can get on what you want and where you want to go, the more easily you're going to be able to attract and identify who that right person, group, or program is for your success. All right. And with that, I know our real estate accelerator program ourselves. So we do have our real estate accelerator mentorship program. We recently launched an end of year extravaganza sale. So we have both our diamond and gold level are being offered at record low pricing for the end of the year from now through January 6th. You can join our RIA Diamond done for you business in a box for $15,000 plus $497 a month. Or you can join our RIA Gold program, which is discounted to $5,000 a month. So just to talk a little bit about our RIA Diamond program. So we have, like I said, a done for you business in a box. So we're helping build out your website, automations, professional copywriting, content, branding, design, everything that goes into building in that foundation for your business here. So we're super excited by it. We have our RIA community has been super active over the last couple months, and we've been having a ton of success in the group. So we've had over $140 million in capital raised within our RIA group for their own deals. We've had over 30 partnerships formed. We've helped launched over 35 new syndication brands. We have people raising millions of dollars on their first raise since we launched their program. We actually also just did a little poll within our group. We have over 15 groups actively or recently closed on a deal within the last month. So even as we're coming towards the end of the year, there's still a lot of momentum, a lot of activity out there in this space as well. I know our Goodegg as well is still doing deals to this day. So yeah, a lot of movement in the community right now.
Indeed. And so for anybody out there who, of those two paths, the acquisitions and asset management versus raising capital, if you've decided that raising capital is the right path for you, whether or not you join the real estate accelerator, we want to make sure that you find the right mentor. It can be really challenging, especially in this shifting economy, to really get your business and your brand off the ground. And so Quentin has talked about our offerings here, RIA Diamond as well as RIA Gold. And I just wanted to clarify, RIA Gold is $5,000 one time plus $200 a month, not $5,000 a month. And so we have these two programs available to help you raise capital, but we know that it may not be a fit for everybody out there. And so if you're wanting some help, we've been part of almost every multifamily mentorship program out there. So even if you're like, I don't know if this is right for me, but I want to consider how this stacks up against this other program, or not sure which direction to go, reach out to us. We're happy to share our experiences and our insights being part of these other programs as well, because at the end of the day, we just want you to find the right program for you.
So yeah, so with that, as Annie was saying, definitely you'll be able to schedule a call here with us to discuss any next steps as far as the real estate accelerator program, or just questions about the mentorship program in general. Our end of year promo is going to be going through January 6th. So happy to continue the conversation and explore mentorships, paid, unpaid, and everything in between on how we can support you.
Indeed. Let's make it a great 2023 ahead.
Yes, definitely. And we will be back in the new year, January 4th, same time, same day of the week as usual for our next RIA Live. So excited to see you back in the new year. Happy holidays to everyone. And hope everyone gets some time to recharge and reset over this next week.
Indeed. I just wanted to check real quick if there are any questions Let me also check on Facebook. If so, feel free to unmute. All right, well, if not, then thank you for joining. Happy holidays. And as Quentin mentioned, we'll be back in the new year with another great topic in supporting you on your capital raising and syndication journey. All right, thanks everyone.
Bye.